Right, sells from my portfolio. So there's, as previously discussed, Pfizer was something I've sold all of the position from. Again, that was because I thought Novo Nordisk was a better, uh, just a better stock for me to hold in my portfolio. Progeny, when it fell, and fell, I pretty much trebled my position in Progeny, and it's had a really good year today. So I've sold about half of that position back to the market, about 25% higher than where I bought it. Disney, I took about an eighth off because it had grown quite large and it's since fallen, given all of that gain back as well. So that was probably a decent move at the moment. Diageo, we discussed on the show. I got rid of it in full. I still don't fully understand what Deborah Cruz's plan is for Diageo. She was on In Good Company. I don't know how she managed to get on that because it's supposed to be a good company, but she still didn't really give any idea of the plan there whatsoever. And Deborah has the right answers to the questions, but there's no substance behind them. And you kind of like, yes, that's the answer, but how? And they're not giving that bit away. And the last one I got rid of in full, which probably I can't even remember owning that in this year, but it was Rightmove, and it was right at the beginning of the year. I cleared that one out just well, basically it was off the back of the Murdochs trying to buy. It ran up all that way. It was obvious that they weren't coming back to the table. I took a look at that and thought, if somebody offered me that price today, I would have probably sold it. So what am I doing? Hanging on to it. So I gave it back to the market, and I haven't checked where it is actually. I guess we'll find out when we go over the BritBox whether that's been a good or a terrible idea. So look, top 7 performance in the portfolio is Progyny up 25%. These are all year to date. Euronext 22.71, Nintendo 22.62, Zenda 12.14, Steel Dynamics 10.76, Mid American 7.58, Transmedics 7.16. So you probably know the vast majority of them are quite small positions in my portfolio. And here comes the bottom 7. Was Axelis down 30%, Renishaw down 22%, Novo Nordisk down 21.17%, although I haven't got all of that down because I only bought it sort of midway through the quarter. I've got all of this one though. Alphabet down 19.05%, Amazon down 13.2%, Disney down 12.2%, Enphase down 12.17%. Got about 4k in cash at the moment. Again, still not really decided on what I'm going to do. And if you want to check me against VWRP, I'll do it for you. That's down 5.32%. I'm down 6. It's just over 0.5%. I think it's all still to play for, Steve.
It's definitely all still to play for, isn't it? I quite liked your Pfizer sale, actually. It's sort of an interesting one, that, in that I feel like that company ought to be doing better than it is. And I feel the way about that, the way you feel about Diageo, I think, which is that it ought to be doing better. And I don't really understand why. I thought Pfizer, when I got to the point of buying it, which was around the point that you'd got to buying it, I think, just had too much about it that it couldn't, that it had to be better than its current share price at the moment. And they are doing their best to prove me wrong about this. I mean, I didn't kind of deliberately wander outside my circle of competence, but the way I think about circles of competence is that the further outside you go, the bigger the margin of safety you need. And look, with a big enough margin of safety, you can buy nearly anything. If Pfizer started trading at a market cap of 100 million, and you can see its balance sheet, would you know that was undervalued? Yeah. Would that have anything to do? You need any knowledge of drugs whatsoever for that? No. Just based on the cash in this thing, who the hell cares about the market or the R&D or anything else? At that kind of ridiculous level, it would get cheap enough. And my conclusion, it was close enough to that. And I don't really get why it hasn't worked better, to be honest. My strong suspicion, by the way, is that all the things that you've sold, that you've kind of listed here, you would find yourself in. I don't know about Rightmove. It's really been choppy since the start of the year, this stock. It would greatly depend on where you sold that. But the rest, I suspect, you are in the right side of selling on that, which is to say they are lower than they are when you sold them. The stuff that you've bought may also be lower than when you bought it. And the question is what the difference looks like. But Disney and Progyny are kind of interesting. It's a nice feeling, isn't it, when you get stick more cash into something without inflating it too far in your portfolio because it's fallen too far, and then it gets back to where you thought it was going to be, and you get the cash back and keep a decent amount of the shares. So, I mean, these look like kind of decent sells to me, but um, Disney made its way back a bit. That was the one that perhaps slightly surprised me. I wasn't sure that was getting to. I thought that still had a bit of a way to go. Did you think that reached value, or did you think that reached a size in your portfolio where it was time to um, keep it in check a bit?
It actually got to either my second or third biggest position at one point. It was only up about 12 or 13%, which will kind of tell you how much capital I'd committed to it when you compare it to the ones around it. So once it got to that kind of size, I thought, look, I'll pare it back. I'll take that because I needed some money for things like Judges Scientific and things like that, just enough to top me up, just so I could get. I think I wanted to get Sartorius and Judges Scientific across the board, and I needed to find a sort of £500 or £600 extra just to get them started. So that's where I decided was probably the best place to take it from. And again, that's come down a bit since then. So I'm pretty happy with that. Like I said, I think I was up 10 or 12 or something like that percent, and I think I'm nearly back red with Disney. I can't remember since the last time I sent you the thing, the screenshot over, Steve. But I know Disney also fell about 2.5% the day after I sent you it. So I think I am close to being back red on it. So selling that was definitely the right idea for me at the time.
I also quite like your Rightmove sale. Actually, I was looking at the stock, and I don't necessarily judge things by share price, but I mean, our view on the company's been fairly similar and fairly fixed for quite a while. Very strong position, very, very, very attractive margins. Doesn't take a lot of capital to run, and actually, it doesn't look like a big dividend payer or a big share buybacker. But they do use nearly all their cash for this sort of thing. The reason it doesn't look like a lot is because the share price is so high. This is a company that doesn't need cash, doesn't really retain cash, flings it all out, keeps growing. So these are massive box ticking things, right? It manages to grow without reinvesting, sends its cash out, buys its shares back. And after the last 5 years, when I looked earlier, I mean, now it's a different last 5 years because 5 years ago now takes us back to pandemic crash levels. But when I looked sort of earlier on in the quarter, you were largely thinking chopping sideways here, despite the underlying business growing very well. And you would say, well, watch the business, not the stock. Business doing better, getting stronger, growing, increasing revenues, increasing profits. Margins are still huge. Nothing's going badly with this business. Why is the stock not responding? Answer is really damn expensive 5 years ago. And it still doesn't look like an obvious screaming bargain, despite the fact that the company has done very, very well over the last half a decade or so. And the share price hasn't moved. So I'm kind of all right with selling this. I'm not sure what to make of the competition potentially coming from on the market. I'm more agnostic on that than a lot of people are. I think people dismiss this a bit too quickly. But I quite like the look of that sell for what that's worth, Steve.
So I'm in the opposite camp to you. I'm not particularly bothered about the on the market competition. I mean, it's been competition for a while. I just think I can't see that being a massive issue for Rightmove. I don't think it's a case of something you just chuck money at and they'll be automatically competitive. I think Rightmove is so entrenched in the market, but that doesn't make it, like as you point out, a very a great investment. In the last 5 years, Rightmove's up like 50%. It's 10% a year, and you remember in the last 2 years we've done 26 and 29% or something like that. So it's not been a great performer, and that's not because it's lost market share or become any worse of a business. It is exactly like you say, Steve, because it was pretty overvalued. Now, when we bought it, we thought it had come down to what was a reasonable value. It went up to what was less of a reasonable value. And the reason it jumped as big as it did, because it was relatively flat at the time, was because the Murdochs wanted to buy it. And that artificial leap was where I sold it. Didn't stick around, and then they got some decent earnings, which took it back to similar sort of level to the price the Murdochs wanted, but to pay for it. But yes, largely fine with this. With my all my sales, really. There's nothing here that I regret.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account for Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.